Welcome back to Explain the Charts, everyone. Today, September 21st, 2025, we're cutting through the noise to deliver an in-depth look at Ethereum, or ETHUSD, combining the latest market news with a detailed technical analysis. First, let's catch up on the significant news shaping Ethereum's landscape. The market is buzzing with optimism, fueled by strong institutional interest and substantial inflows into spot ETHs. Reports indicate massive ETH purchases by major treasury companies like BitMine Immersion and SharpLink Gaming, totaling hundreds of millions of dollars in recent weeks. This institutional confidence is partly a response to cooling US PPI inflation, which came in well below expectations, creating a risk-on environment favorable to crypto assets. Analysts are projecting an optimistic path for Ethereum to clear the $5,000 hurdle, with some even forecasting a potential 77% rally to $8,557 if a key resistance level is decisively broken. A significant network development, the Fusaka hard fork, is slated for December 3, 2025, promising enhanced scalability, security, and cost efficiency, which could act as a major catalyst. Technical indicators like an inverse head and shoulders pattern and rising on-balance volume (OBEV) are also hinting at bullish momentum, suggesting ETH might soon gain ground on Bitcoin. However, it's not entirely smooth sailing. The market remains cautious after ETH's attempt to hit $5,000 in August 2025 failed. Ethereum has been in a crucial consolidation phase, generally trading within a wide range, and risks like macroeconomic uncertainty or regulatory shifts could still trigger pullbacks. Now, let's turn our attention to the charts to see how these news events are reflected in the price action. Looking at the one-day chart, we get a broad overview of ETHUSD's journey over the past year. We can observe significant volatility, including a massive surge in May 2024, followed by a sharp correction and consolidation period. Noticeable is the deep plunge in early August 2024, where ETHUSD briefly touched lows near $1,900, but managed a strong recovery, demonstrating underlying resilience. The period from August 2025 saw a substantial run-up, with price highs nearing $4,958.70, validating reports of an all-time high attempt. This peak, however, acted as a strong resistance, with the price failing to sustain above this level and entering a subsequent pullback, precisely as mentioned in our news review. Let's zoom in on a specific period on the one-day chart from early September 2025 to pinpoint how positive news impacted price. Here we can clearly see a bullish impulse starting around September 10th and extending through September 12th. This aligns perfectly with the news of cooling US PPI inflation and the reported massive institutional purchases by BitMine, starting around September 11th. This period demonstrates a direct correlation between positive macroeconomic news and significant price appreciation, with ETHUSD climbing from approximately $4,300 to over $4,700. The subsequent price action shows that while the momentum was strong, the overhead resistance prevented a full breakout towards $5,000, pushing it back into a consolidation. Now, switching to the 15-minute chart for the very recent activity, up until the closing hours of September 20th, 2025, we see Ethereum trading around the $4,483 level. The recent movements are characterized by relatively tight ranges, indicating a phase of price discovery or accumulation. This recent stability, post the larger pullback from August highs, suggests a potential setup for a renewed push, particularly if buyers can maintain control. Volume spikes, when they occur within this smaller time frame, could signal intensified buying or selling pressure, so keep an eye on them for early trend indications. The ongoing institutional buying and bullish on-chain metrics suggest that despite this short-term consolidation, the long-term outlook remains positive. So, what are the key levels to watch and what does the future hold for ETHUSD? First, a crucial support level identified by analysts and visible on our daily chart is around $4,300. Maintaining above this level is vital for the bullish narrative. On the upside, the psychological and historical resistance at $4,811 remains the most significant hurdle. A decisive break and sustained close above $4,811 could trigger the predicted 77% rally towards $8,557. The all-time high target of $5,000 also acts as a major resistance point that ETH failed to overcome in August, making it a critical level to watch for short-term traders. Short-term, the consolidation between $4,200 and $4,700 is likely to continue in the coming weeks, holding a 60% likelihood, especially if there are no immediate market catalysts. However, given the strong institutional interest and the upcoming Fusaka hard fork, a bullish breakout towards $4,811 and beyond, potentially hitting $5,000, carries a 70% likelihood if consistent buying pressure persists. Conversely, a failure to break above current resistance or unexpected negative macroeconomic news could lead to a retest of the $4,300 support, with a 30% likelihood. Long-term, the fundamental developments like ETH staking and the Fusaka hard fork point towards sustained growth, reinforcing the bullish outlook for higher price targets like $7,000 and even $8,557 in 2026. Traders should closely monitor overall crypto market sentiment, any new regulatory developments, and especially the price action of Bitcoin, as its trajectory often influences altcoins. Keep an eye on the volume during breakouts or breakdowns. Higher volume reinforces the validity of the move. Also, watch for major announcements surrounding the Fusaka hard fork on December 3, 2025, as this could serve as a powerful upward driver. Don't forget to like this video, subscribe to Explain the Charts for more in-depth analysis, and hit the notification bell so you don't miss our next update.